Well, welcome to another episode of WealthDoctors.us. I'm Dr. Stephanie Ardrey, and with me is Dr. Andrea Le. And boy, do we have an exciting show for you today. But before I get into that, let me check in with the doc and see how she's doing today. Hey, Doc, how
Yeah,
you doing?
doing great. Just getting ready for this and for the next event coming up. But it's a great day here in Southern California. And today's topic, I just want to, in our line of business financial planning, we, often encounter a lot of clients asking us how to establish a living trust. A living trust. While we're not attorneys that specialize in living trust, we do have resources and informations and also referrals to ensure you have a trust that's set up correctly. So today we have a special guest. His name is Attorney Vinh Doan. He holds a master's degree in science and a Juris Doctorate and also LL.M in taxation, and with extensive experience in corporate sector, focusing on finance. He's now, finance and taxes. He's now practicing in estate planning, probate, tax resolution, and business law. He's also fluent in Vietnamese, and he's been serving our community here in Orange County in Southern California. So he's here with us today to discuss about living trust and explain why it's important for every family to create one. So without further ado, please welcome our special guest.
Good morning.
Hi.
Hi there. How are you?
Welcome. So excited to meet you and have you join us today. I think this is going to be such a rich topic. Again, I'm dealing with families. We've had, recent deaths, people involved with executing wills and, do they have to call an attorney? All of those things. So this is definitely a rich, rich topic.
Great.
Absolutely, absolutely. And I'm glad to be here. Thank you for having me.
Yeah, welcome, Attorney Doan. Thank you so much for joining us today to discuss about living trust. Could you please share with us your area of expertise and also explain why it's important for every family to create a trust?
Absolutely. So the primary practice of my practice is estate planning. Uh, that's a bulk of my practice, and it's so important to do a living trust. The reason for that is that if we have asset, especially if we have a real property, etc. Well, after we pass away, it doesn't know where to go. It's not automatic that it will go to our children. So it needs the supervision of the court, which is the probate process, and that could drag out for a number of years, and the cost could be considerable. So to avoid that, we do a living trust, and we put all the properties in there, and then when we pass away, it goes to our beneficiaries without having the involvement of the court.
And that's so important because you have to make sure that not only do you understand those transfer of assets, but you need to understand and make sure that every time you transfer that you check all of the boxes, because I've seen people have their assets or some of their assets transferred to the trust, but then they're going through some type of financing mechanism that perhaps they're refinancing the asset and they have to pull it out of the trust to complete that transaction and then make sure that the asset is then returned to so there's a lot of maneuvers that oftentimes, and then, or what has come up recently are situations where that trust was created with a legal professional. Now this person has passed, and that person that prepared the trust is no longer available, and there are concerns and issues or details about the particulars of the trust. So, what are some things that people should also think about in terms of making sure that not only is the trust executed or prosecuted properly,
Mhm.
but is also not only available, but is kind of established in a sense of it outlives the attorney or whomever prepared it in terms of where it is so that it's accessible at a time of need.
Yeah, absolutely. So it's that's a great question, because sometimes when the grantor or the trustee passed away, and the beneficiary, the trustee, cannot find a copy of the trust. So when you're still alive, you want to communicate that to your trustee or your beneficiaries that you do have a trust, and the attorneys that prepared the trust. So in the event it can be found, your beneficiary or trustee can locate this attorney and ask for a copy. So my office always keep a copy in a file, the scanned copy, the executed copy in the file, just in case, in the event that the original couldn't be found. I also provide a USB as well for my clients to bring home. Okay, so it's always a good idea to tell. Well, I don't recommend put into a safe deposit box, but put into a safe location, and so it can be easily discovered upon your death. So that's why I always recommend. Absolutely.
Do you also recommend to print out a hard copy and keep it where all the important documents are going to? That way the family have access to it is in case something happens, right?
Yes, absolutely. That's something that I always I recommend my clients to do, is that they print out all the accounts that they have, right? So treat the binder, the portfolio, the trust portfolio as a central location for all your important documents, especially with the financial documents, right? Bank account, retirement account, investment account, life insurance, anything that's available. Sometimes we have multiple bank accounts. Some people can have 5, 10 bank accounts, and it's very hard to track. So if you have everything in that binder, it makes it easier for your trustee or your beneficiary to find them and try to reach out to them after you passed away. So extremely important. Okay. And I always recommend that my clients, like you mentioned earlier, that if sometime the language in there is not as clear or the law change, I always recommend my client within 3 to 5 years have your trust reviewed to see if any change, any update need to be made, etc.
You said every 3 to 5 years, or would it be maybe more often if a family is, say, if they're in their peak, family expansion mode, where they're having, maybe they're having children every year, they will possibly had multiple kids in that timeline, or other changes, other transitions, right, could happen. I think that people should think about their needs at minimum. I think that the federal government makes us pay taxes annually. I think at minimum, since you're going through the process of paying taxes, you might as well check in on the rest of your well-being as well.
Yeah. So, if there's life-changing event, like you have children or a divorce or a marriage, etc., you might want to have it reviewed. But generally, if there's no changes, 3 to 5 years, I think would be sufficient.
With families that, let's say they don't have any asset, they have no house, they're renting, they not much in their wealth. Is it necessary to even create a living trust at that point?
Yeah, it depends on the situation, really. So with a living trust, you have control beyond the grave, basically. Even you pass away, your assets still within your control. So you have a particular situation where you want to have, for example, you have children who is not very careful with money, or special needs children, you might want to have that special needs trust, right? Or create a living trust that you have currently. But let's say you don't have a real property, you don't have any assets. Generally, all those accounts that you have, bank account, investment account, you can actually name, or life insurance for that matter, you can actually name an individual as the beneficiary of those accounts. So after your passing, it will go directly to those beneficiaries. So in that regard, in terms of a very standard process, then you don't need a living trust. But in special circumstances, I mentioned earlier, where you have a beneficiary who's not careful with money, or special needs beneficiaries, you want to put into that living trust so you have more control how to take care of your beneficiaries, your children, etc. Then you want to have that living trust set up, even if, let's say presently you don't have anything. A life insurance policy might be considerable, right? Right now, it might not worth a lot, but after you pass away, there's a lump sum that's going to be distributed to your beneficiary. In that case, you might want to create a living trust and then transfer, naming the living trust, either the trust as the owner of that life insurance policy, or the living trust as a beneficiary of that insurance policy, life insurance policy.
So you can do both, beneficiary or the owner of that policy, right? For the living trust.
Correct. So you can create a separate trust as the owner to purchase life insurance, right? Or you purchase life insurance under your own name and then putting the trust as beneficiary.
Transfer. Okay.
Yeah.
There's a very good point that you just made earlier. Even though for your current situation right now, you may not require to have a trust since, there's not much asset, like not owning a home or having a large sum of insurance policy or any other asset. It makes sense. It may make sense for you to delay the trust a little bit later, but in the long run, it's better to have a trust established because, later on, like you said earlier, for an insurance policy, there is a lump sum. Could be 5, 10 years, 20 years from now, and that lump sum can go up to $1 million or a few $100,000. Let's say if that lump sum goes into your kid and your kid is under 18 years old, and they may blow it all in just one shot, buying a car, going on a fancy vacation, that money can be gone. But if it's under a trust, you can determine how much money to release in a certain amount of time, right? Attorney, we was discussing about this last month. So I was like really intrigued. How do you divide the asset or set a certain amount of time that goes to your beneficiary or goes to your children?
Yeah, absolutely. So under the trust, you have absolute control. It's your asset. You can text it in any way that you like. You can give to your children a certain age if you like. Let's say 18 is too young. You can say 25, 30, or if you want, you can do in installments as well. So let's say when I die, my child will get 25%, and then 5 years later get another 25%, etc. So you can actually do installment. That means it's so powerful that you can control the inheritance even after you.
I like that.
So it's not just a lump sum. So you lump sum,
Right.
you can if you want to, but let's say your child is too young, then you don't know whether it's going to be used responsibly.
I look back in my 20s. Sometimes we just do things that we don't think, right? We just
buy a nice car, and that could be
exactly
100,000 right there, right?
Right. It's good to have that installment in process.
Yeah. And then
Absolutely.
you mentioned something. Go ahead.
Well, I was going to just ask you, once you finish that thought, I wanted to ask you a question about how basically the distinction between what the will does and how the will and the living trust work both independent and together as part of an estate planning process.
Yeah, great question. So just to finish my thought with Dr. Lee is that let's say you have insurance, right? Or you have property. If you're young, you have a little bit of time, but eventually you will need one, right? So I always recommend a client, you either get now or later. The sooner you get it, the more protection, the earlier protection that is. So either sooner or later, you're going to get one anyway, okay? With life insurance or with any accounts that you have, it's so important to stress that you want that power of attorney or advanced healthcare directive of California. You want that prepared ahead of time. Let's say you're not ready for a living trust. Make sure that everyone should have it. Is that the power of attorney for financial matters and the advanced healthcare directive for medical matters. Okay, this is in the event you became incapacitated. You never know. You're going to have a stroke, a heart attack, an accident, or even dementia, right? Then somebody needs to step up and be able to manage your finances. Those are outside the trust. So if you don't have a trust, just get those done. It's so simple to do. Let's say life insurance, you have living benefit and you became incapacitated. It's very hard, very difficult for your loved one to go in and access that living benefit without the power of attorney, without the court intervention. Okay. And then regarding the will or trust, that's a huge difference. A will, basically, well, let's say you don't do anything at all and you have to go and something happens to you, you pass away. Well, that will still need to be probated. The court still have to supervise the pass on the assets to your to your heirs. Okay, with a trust, you don't have to go through that process. So even if you have a will, it's not safe. It still needs to go to probate. So that's why that's a huge difference between the two. Okay. With a will, you help the court with that. You already name who your beneficiaries are. You already name who the executor is. But other than that, the court still need to approve the entire process.
Right, because what the trust puts in place is a legal structure for execution, and transfer of assets has already begun. No, it's important because a lot of times when you're speaking to people, again, they're not as familiar with the various tools and what each tool does. And I know because I've had these conversations where someone said, well, I have a will. Why is it that that's not sufficient? And it's because there needs to be a mechanism to prosecute that will. And if you don't have that mechanism in place, then you're unable to do that. And so then something has to step in, and that's where the legal process steps in order to do that.
Right. So we're not safe with just a will. A will is basically better than doing nothing.
Sure.
Yeah, just a little better.
It's better to have a trust established. I mean, simple as that, to protect you and your family, in case of, like you said, things happens and you become like for dementia, and you cannot, have the beneficiary cannot access a life insurance policy for that instance. So it's good to have that in place when an event happen, medical illness. So I have a lot of clients also asking, what is the difference between a revocable trust and an irrevocable trust? Which one is better for them for an event that they have a lot of asset or a situation where they have no asset at all?
Yeah. So irrevocable trust means that you're still in full control of everything inside. You have full control of revoking the trust or amending the trust anytime, as long as you are capable of doing so. So everything is still yours, essentially. Okay. But the downside of that, because everything's still yours, it's still part of your estate, still part of your assets. If you get sued or litigation or tax, there's no change, there's no difference. Okay. Whereas an irrevocable trust is what the name implied. It's irrevocable, it's not revocable. And because of that, that's a structure you have to do it, but because of that, essentially that asset, it's gifted away. It's transferred away, it's no longer under your name. Somebody else essentially have to manage it for you. Okay. If that's the case, if the structure is done correctly, then you are protected. It's no longer your assets. If you want to take it back, you have to transfer something in of similar value or have to purchase it back. Okay? And somebody else have to not related to you to manage that trust. Okay. If that structure is sound, then when you get sued, for example, then you are protected from being attached to that property because it's no longer yours. So that's the difference between the two. It's extremely complicated to do an irrevocable trust because it's multifaceted, and once you do it, it's extremely hard to make
changes.
There's way to revoke it, but extremely challenging to do so.
Difficult.
Okay. And it's no longer your assets. And if you want to use it, it's going to be it's based on the trustee discretion at that time. Okay. The reason why people do an irrevocable trust is that they have a lot of assets, or they have the very complicated family structure and they want to gift it away, or they want to avoid estate, not part of that estate value at the end when they passed away. Then they can consider an irrevocable trust instead of revocable trust.
Right, that's a good point. The distinction between the two, it sounds like irrevocable trust is a lot more complicated. So the most common one people should look into is the living trust, the revocable one, right? Because it's it helps to protect during the probate process, that you don't have to go through that when you pass away. And also, like in a trust, there is a trustee and a trustor, right?
Mhm.
So who would you appoint as a trustee in your trust to make the most sense? I mean, to protect you and also in event something happening.
Right. Well, the trustee, you can designate anybody. So the trust is just an agreement between you and the trustee, right? The trustor and the trustee. So you can designate any trustee. You are the trustor, the one that creating the trust. You are the initial trustee, right? So after you, going to be somebody else, successor trustee, alternate successor trustee, etc. So you can designate anybody, but it makes sense in reality to designate somebody who's going to be around, who's going to be healthy, 10, 20, 30 years from now. You don't want to designate you. Well, you can, but if you want to, but it's not recommended to designate somebody who's older than you or who's in bad health, etc. Because when you do this, after you pass away, it could be 30, 40 years from now. That individual might not be in good health or already passed away. Okay, so that's why it makes sense to review your trust periodically to kind of update it. If you see an individual is in bad health or they're passed away, you want to update those individuals to be as safe as possible. And then there's one more benefit that I failed to mention is the having a living trust. So let's say an individual have a house and they're currently low income and they're on Medi-Cal, for example. Okay, if the property is under their name, any asset that has to go to probate after they pass away is subject to Medi-Cal recovery. So that means that for certain expenses, the Medi-Cal can go in and try to recover the expenses they paid for you. Okay. Well, if it's properties inside the trust, that means it doesn't go through probate. Therefore, it's not subject to Medi-Cal recovery. So that
is a nice one.
Yeah. Added benefit for people who are on Medi-Cal as well. It's not just probate avoidance, but it's also avoid Medi-Cal recovery.
That's an excellent point to make for those that have low income. You own a home and you're currently on Medi-Cal, so this is something that you should consider to create a trust, protect your house and protect your family. Yeah,
absolutely, that's right.
Yeah, these are so important topics and definitely timely. Again, I see it on not only the real estate side, but on the business side as it relates to business assets. We talk about it as it relates to insurance. We talk about it, just in all of these other circumstances. And I've lived through having to deal with it, personally. So it's a very different experience when you're involved because unfortunately you've lost a loved one, or if you're dealing with, for example, probate real estate, there's a lot of issues that arise when you deal with assets, and especially when the plans have not been put in place properly. Families go through a lot of emotional trauma around loss, and conflicts just further complicate those matters.
Absolutely. If there's a conflict in place, let's say it's going to probate, that's a cost that'll be considerable. But if there's a conflict, the cost going to increase multiples.
So I have a question for you, because even though this may not be usable for legal purposes, I was just speaking with a colleague the other day, and he was asking me what he should do. Again, and I said, based on my experience, one of the things that I wish I'd done was when I was put in place to be in charge of my grandmother's estate, I wished that I'd had a video recording of her telling why she was making all of the decisions that she was making, and when she was in clear right mind, why those decisions were being made. Because what she did was, in my case, she made my mother a witness to it all, because that was her youngest child. But tragically, my mother died first. And then suddenly I was hung out to dry, because by the time, the other family members were, participating in probably what I would say borderline senior abuse, she had dementia. So she couldn't remember. And, the attorney had made a lot of mistakes. So of course you don't know those mistakes until you discover that there's mistakes.
Yeah.
So I've just seen the worst of, family scenarios that can arise when these plans are not properly in place. And I don't know why people don't want to talk to their family members while they're well. I really think this should be a conversation that should have. It's a crucial conversation. But if you have not at least had the conversation, in your opinion, would you think there would be any benefit of, the person having a video of just them stating while they're still in their right mind, wishes verbally that also are corroborated by their trust and other legal estate planning documents?
Absolutely. I think that is a good way of approaching it. Having a conversation, open discussion with the family regarding your estate plan is a good thing. But sometimes family situation dynamics are different. So sometimes we don't have that luxury of doing so. All you can do is protect yourself as much as possible, especially with elderlies, people in bad health, or have starting to have sign of dementia, what have you. You want to follow several steps. I always recommend my client when they make changes, especially in later years of their life, is that they want to get a doctor certification. Okay. So once a doctor is certified that, this person is of sound mind, fully capable of making decision, that's good evidence right there, right? I also recommend my clients to, let's say in that particular situation, to handwrite if they can, their wishes, right? And sign and have it notarized if possible. The other thing is making video recording, just like you mentioned earlier. But these are going to be evidence in court should somebody challenge the trust or challenge the decision of the grantor or the trustor in this case, right? So it follows several steps. That is just the very important ones, but there are several ones that I would also recommend. But if you get these in place, save those as evidence just in case. Once the evidence is clear, because once a person passes away, it's very hard to.
Right.
Now it's going to based on the person's health, based on the medication that person is taking that time to invalidate or void that trust. So I always recommend if you're older, and my clients, they always do that. If they can't get this, they open to litigation at that time of being challenged, right? Especially to the heirs, right? Or somebody get disinherited. If it's divided equally, then sometimes it's not a big deal. But if, let's say, one of the children get disinherited, or that the previous heir was removed from the trust, that's ground for the trust to be challenged or be disputed.
So in your opinion, since you did mention that you also litigate these trusts, are you seeing any increase or uptick in fraudulent activity around living trust or in the probate system?
Sure. I mean, there's caretakers who are taking being abusive in terms of financially to the trustor. The trustees not acting appropriately, etc. So all those things are part of the litigation process. So that's I don't see an uptick. It's just always been around. So, but the family should pay close attention to their family members, especially the seniors, the older, the people with in their who are a little bit older.
That's great.
It
That's
happens.
yes.
Yeah.
No, I think this is such a timely and valuable conversation. Attorney Doan, we may have to have you come back a few more times, because I think that as we continue in our daily activities, we come across these different situations, and we created this platform as a way to educate people and especially make at least some of the initial questions accessible, so that people will have, the basis to go ahead and seek further expert advice, but at least feel comfortable that they have a baseline of understanding and a vocabulary regarding what things they should inquire about further. Mm-hmm. And so I think that this, is an important forum to be able to provide that education and understanding, so people know, yes, I should take some action. I really don't know if something is, can happen tomorrow. Anything can happen. That accidents happen. They just do.
Absolutely. And thank you. I'd be happy to come back anytime. Should my expertise needed. But for going away thought is that everyone should, even if you don't have a lot of assets, you don't have a home or anything like that, and you're not presently needing a living trust just yet, make sure you get that power of attorney and healthcare directive done as soon as possible. It's so simple to do. Complete it, go to a notary, get it done, and you're done. Just save it there, give it to whoever your agents are, just in case you need it.
So I guess, I mean, at the end is, if you, for setting up a trust for yourself or for your family, it's important that you consult with an experienced estate planning attorney who can help you answer these questions and ensure that your living trust is set up correctly and most importantly, effectively. So if anyone needs to contact you to inquire more information, Attorney Doan, what phone number do they call you? Do you have?
Sure, yes. My law office number is 714-332-9700.
And you also can email Attorney Doan at vindawnlaw@gmail.com if you need to inquire more information, how to set up, or a question about living trust or any of that matters, or anything related to will, trust, and probate. He's the expert in this field.
Yes, absolutely. Thank you.
Excellent.
Well, thank you.
Thank you for joining us today.
Absolutely. Thank you for having me.
Well, we appreciate your presence and hope you found this session helpful. We go live every Wednesday at 10 a.m. Pacific time. Please join us next week for more exciting content. Until then, we encourage you to take care of yourself and your loved ones. And if you don't have a plan in place, please consider creating one. If you already have a plan, we recommend to review it and update it to make sure it is the best plan that it can be. Have the most wonderful day.
Thank you. We'll see you next week.
Thank you.